If you remember, in August, we had an IFB and there was an oversubscription, all right? And then in September, CBK reopened two papers. There was the 2024 paper, which had a coupon rate of 16%, and a 2016 paper, which had a coupon rate of 14%. Now, the August IFB had an oversubscription. Oversubscription means that your banks, your MMF, your SACCOs, so many of them had a high demand. They had an appetite for that paper, for the IFB. Okay? Now, in July and June, we had under subscriptions. Whatever amount CBK was looking for, they did not get. For instance, if they were looking for 30 billion, the subscriptions were maybe just 25 billion or 20 billion. The demand for the bonds were down. And then come August, the demands for the bonds were poof. There was an oversubscription. Many people placed their bids, including you, including myself. We put our bids for that IFB, for the August papers. One, because their interest rates were attractive. There was a 17.9% coupon, and I think it was a 14.3% coupon, 399, say 14.4% coupon in August. And then in September, CBK reopened papers which had coupons of 16% and 14%. And the appetite for the bonds came down, including your MMFs, your SACCOs, your banks, the institution, the competitive bidders. Competitive bidders are people who bid in excess of 2 million, mostly institutional bids, yeah? The SACCOs, the pension funds, your bank and etc. They withdrew back their money, hoping that next month CBK will increase the coupon rates. But guess what? I don't know. Maybe it's time for you to tell your money market funds and your circles to be watching my videos. In this video, I told you guys rates were coming down. In this other video, I also told you guys that CBK was working towards reducing their interest rates. In this video, I reviewed the rate cut by Fed Reserve, and I told you guys that interest rates are coming down. I also told you why they'll be coming down. Okay? Now, come October. Before we review October results, please press the subscribe button on your screen if you haven't subscribed so that you don't miss out on these videos. This is one channel that is quite beneficial to you if you ever want to attain financial freedom or if you want to be at par with your finances. All right? Anyways, come October, CBK reopens the 2022 paper, which carries with it an even lower rate of 13.49%. And the other paper which was opened for October was the 2016 paper, which had a 15% coupon. Now, what was your expectation? What would the demand have been? Knowing that in August, we had an IFB of 18%, there was an excess demand, there was an oversubscription for that paper. In September, the rates came down a little to 16% and 14%, and there was absolutely no demand for that paper. I want you to see how this trend is looking like, yeah? In August, 18%, we have an oversubscription. In September, we have 16 and 14%, and there is no demand for those papers. All right? And then now in October, remember September we have 16 and 14%. Now in October, CBK now reduces these rates even further to 13%. And guess what happens? There is a high demand for the Treasury bonds. There is an oversubscription for those bonds. As in, now your money market has woken up. And after they had missed the 16% and the 14% in September, now come October, they are now demanding. They are now finding this 15% and 13% coupon rates attractive and putting forward their bids. There is an oversubscription for the October papers. Why is that making me happy? That the rates, that the coupon rates are becoming lower. It is speaking towards the economy becoming better. Interest rates are coming down. I've been telling you this consistently. Interest rates are coming down. If you want to invest in the Treasury bonds, this will be a best time for you to jump into this bandwagon. Now, there has been hearsays about possibilities of the government defaulting in papers, in its debt. There has been talk on the streets about the government defaulting in its debts. Whereas, I know, I have told you guys before, that the risk in Treasury bonds is very low. I have also said that there is absolutely no risk-free investment. Let me ask you, if there's a high possibility that the government is just about to default in its debt, why then do you think that your bank, your SACCO, your pension fund, your MMF, which has a chance, which has this knowledge about the financial sector, and they have the full knowledge about the government's operations, why will they still want to pump their monies in the Treasury bond if you think the government is about to default in its debt? And it is that street rumor that most likely made you not to take up the IFBs in August, which had a very high coupon. It is that street rumor that made you not to take up the September paper, and probably what made you not to take up the October paper. Have a look at these results. The government was looking at receiving or borrowing 30 billion from the public. Guess how much it had in offers? 50 billion. As opposed to September auction, where they were expecting to receive 30 billion and only got bids of 22 billion, even though the rates then were higher. They were at 16% and 14%. Now in October, like I have told you, they were looking at receiving the same amount, 30 billion, and they have been offered 50 billion. 50 billion, yani 20 billion in excess of the expectation. The previous month, they were looking for the same 30 billion, and they had offered higher coupons, but they only received 22 billion. Now this month, when the coupon rates have even come down, the tax rate have been the same. Last month's auction and this month's auction are both taxed at 10%. Yet this month, we are seeing an oversubscription, 50 billion. While they only needed 30 B. And out of that, they have accepted 31 billion. So this means that even your bankers, even your MMFs, even your SACCOs, even your pension funds are now seeing what Berlin has been talking about in her videos, that interest rates are coming down. So they are rushing. This month we have seen a rush to lock in the now available rates. So what is this telling me? Or what has this communicated to CBK? Next month, don't be shocked if you see the rates coming down to even 12% or 10%. So what am I telling you? If you have money that you had purposed to invest in bonds, but you are holding it behind because you had somebody somewhere saying that there's likely for the government to default, there's a high chance of government defaulting in its debts, or you can get higher rates. You saw the papers saying that, I don't know what's wrong. I don't know what, some analysts though, anyways. You saw the paper saying that that investors are demanding for higher demand. They're holding CBK by the neck, demanding for higher demands. Be watching my videos. Be watching my videos. Be watching the videos that I put up. You can see clearly that I have not misled you guys. I have been giving you accurate reviews that rates are coming down. And next month, don't be shocked if CBK reopens a paper with a coupon rate of 13% or even less, 12%. So rates are coming down. If you hadn't joined the bandwagon, this will be a good chance for you to join and open up your USD account and start investing in the Treasury bonds. To those who have been following me and have been watching my videos and took the advantage and invested back then when the rates were still high, congratulations. Please continue staying on the channel, continue watching these videos so that we can all grow together, because the ultimate goal is for you, my audience, and me to attain financial freedom. All right? See you on the next video.